Are you someone who is an entrepreneur and wants to take it to the next level, or you want to be an entrepreneur, but you don't know how to get started and you've got a major stumbling block? I would say the number one stumbling block that we all run into, which is, of course, how to raise capital. A little bit of a different focus today, guys. Welcome back to the ROI channel. Today, we're focusing on entrepreneurship, which is a big part of where I want to take the channel. And so we're going to talk about ways that I personally have raised capital well over $1 million using all of these methods. I've used all of them. They're all very good. And I'm going to give a little bit of an overview as to each of them. And hopefully that can help you get past this stumbling block, which a lot of times for people is a mental stumbling block in terms of raising capital. You see a business you want to buy, or you see a property you want to buy, or you have an idea for a business and you just don't have the capital, or so you think, to get yourself started. So raising capital is the number one skill of the entrepreneur. If you can't do this, you're really going to struggle, okay? Especially in today's world of fiat currencies. Inflation is running rampant. If you cannot raise capital via equity or via debt, those are the two main ways, then you're really going to struggle, okay? So let's get into it. I'm going to start off with my favorite of all time, which is vendor finance, or for those of you in America, owner finance or seller finance. This is one that I have used to great effect, and I think it's my favorite, really, to be honest, out of all of them. So what is it exactly? Very simple. Instead of you going to the bank and getting finance, you might be buying out a business, right? And the business costs you, let's say, $1 million, and you don't have $1 million in cash, and you can't go to the bank to get $1 million. Or an LVR in Australia for a typical business might be 50% if you're lucky. So you don't have 500 grand equity to put in, you can't get a loan of 500 grand. So what do? One way in which you might do it, if you think that the cash flows of this business, and this is a key aspect, if you think that the cash flows of this business can support the debt service of you paying back the owner, then you can look to do a vendor finance agreement. Now, there are two main ways to do this. What I would lead with personally first is to use payment tranches or deferred payment. Okay, this simply means that you could, if the owner agrees, obviously, to take over the business, to have a purchase agreement subject to the completion of these payment tranches. Obviously, the vendor is going to want to know that they got paid. You can go into the business, start operating the business, start earning the profits. Presumably, there are profits. That's why you want to buy the business. And out of that, you can, instead of paying yourself, you can first pay the previous owner up until that point where the business is paid off. Okay, so for our $1 million business, you might go in, have a contract saying that you will continue to operate the business, and full ownership will not pass to you until you've successfully paid out the previous owner. And it'll be, excuse me, completely up to you as to those terms. So the owner might want their money back in 3 years, 4 years, whatever the case may be. Let's say it's 4 years. You're going to have to pay them back, for instance, 250 grand a year over the 4 years. Now, it's a very generous payment term for you as the incoming buyer. You might think, wait, that will never work. No one would agree to that. I've done it more than once and it works, okay? Especially in smaller type businesses, where service businesses that are very difficult to sell, they're not worth a lot of money. They may have good cash flows, but in order to sell, you simply don't get a multiple because it's heavily reliant on the owner. That's the type of business that I've found works very well for this particular method, where you can go in and you can say, yep, no one wants to buy a business, pal. I'll take it. And I'll even give you what you want for it, but you have to meet me in terms of the payment schedule. So that's a way that you can do it without paying any interest. Another way might be that the owner says, okay, I'm open to helping you out here. You need to give me something, though, because I'm essentially performing the role of a bank for you, and I'm taking the risk of you messing up and me having to step back in and take over the business. So in this case, your next option potentially could be to write a promissory note to the owner. So what that looks like is you will essentially enter into a debt agreement with the owner for, in this case, let's say $1 million. You'll have to pay that back over an agreed term schedule, and you'll have to pay interest on top of that. So not only will you pay the owner $1 million, but you will pay them whatever interest rate is agreed between the two parties. Then you'll have to obviously make sure you can take that into account to your payment schedule, and you'll pay that out as if you were paying a home loan, essentially. Okay. So again, obviously it's not advice. You'll have to make sure that the business in which you're using these particular finance structures can support such finance structures, and that's where your due diligence comes in. These are just things that I have done, and I know that they work well, and I'm hoping to give you guys some value through different ideas. The next is very simple, very straightforward. You probably already know about it, but it's one of the best ways to do it, and that's simply bank finance. You go to the bank gives you a loan either on the new business or on you as a creditor. If you've done this a few times, the bank will look at you and usually be quite confident that you have the ability to service a certain amount of debt. They might give you a line of credit, so they'll give you a heap of money to go out and essentially do what you want to do with it, buying businesses up until that point. And obviously you will be responsible for making the repayments plus the interest plus whatever terms the bank puts in. Very simple, very straightforward. If you are a medico in Australia, you have some amazing opportunities. This year I raised $750,000 just simply because I had a trading history and went to the banks, and the bank said, okay, how much do you want? I said, what can you give me, as in an unsecured loan? And one bank gave me $500,000, the other gave me $250,000. Okay. I'm not saying that will be the same moving forwards. I think we're entering into a different credit environment, but the opportunities could still be there, and you won't know unless you ask. Now, obviously it's up to you to make sure you've got a good use for those funds. If you don't have a good use for those funds, it's going to be a burden. Remember, you're playing with debt, so be responsible. And I actually ended up paying a lot of the line of credit back because I couldn't find anything to do with it. So there you go. But it is definitely possible, and I've done it. So there's another option for you. The third big disclaimer is a personal loan. People think, why would you get a personal loan? Well, depending on certain times of the credit cycle, you can get personal loans with quite good terms. So sites in Australia such as Rate Setter, I think they've changed their name now. You can get unsecured loans depending on your finances, I believe up to $50,000, which could be handy for someone who's just getting started in business or looking to buy out a small business. That could be most, if not all, of the purchase price. And the last time I looked, and it was a while, so don't quote me on this, I think interest rates were something around 7 to 8% in that vicinity. So that's not bad to get an unsecured loan, 7-8%. If you can get it, there's another option. Instead of using that personal loan to consume and go on holidays or buy depreciating assets like vehicles, it could be another idea to use that to buy equipment for your business and grow your business. Or it could be, as I said, depending on what you're looking at, you might be able to actually buy a going concern with that amount. The next up, cap raising with notes. What the hell does that mean? So it sounds fancier than what it is. Basically, what you're doing is you're writing IOUs to private investors, creating contracts, and then disclaimer, you are responsible for the performance of those notes. So in other words, you are performing the role of the debtor. Someone is lending you money, and you are going to pay that principal back plus interest over time. So who would be interested in doing that? In my experience, people that don't want to think too much about finance, but they want to get a good income source. So what I've done in the past is raise notes for derivatives trading where someone has given me X amount of money and I'm responsible for paying that back every month in terms of principal schedule plus, in this case, 10% interest. So for that person, that lender, they get a very good amount of interest. It was way above where the cash rate was. It was way above where deposit rates were. And so they were willing to, they knew me, of course, and so they were willing to lend me that money. I then, of course, took that capital and was on the hook to deploy it at higher rates of return than 10% and keep the spread. So if you're not familiar, if you're not sophisticated with that sort of thing, probably not for you, but it is a way that I have raised capital successfully, and it does work. So again, a little bit of creativity, not going to work for everyone, and you need to choose what's right for you, but it is another option that I don't think people think about as much. And obviously all the terms can be set between you and your potential creditor. Just remember, if you're going to do this with anyone, you are responsible for paying it back. So I can't emphasize that enough. The last one I've got here today for you guys is one that I first did, actually. It was really funny. It's called pre-sale. Okay, so what does that mean? When I was at university, I had a performing business. Yes, that's weird. I'm weird. What do you want? And so what I did was I was giving a free performance, and then for some reason, something something took over me, and I took down a list of names saying, hey, I'm going to be doing a show on X date. Write down your name here if you want access to early tickets. I didn't have anything, but it was just, for some reason, I set it to see, to gauge interest. Anyway, the point is I got a very large amount for that size audience of people to put their names down, and lo and behold, they bought tickets. So I was able to raise over $1,000, which when you're at university, you feel like a king. You can buy a lot of beer with that. And so that's principle you can take potentially into your new business. So if you have memberships, if you have something new that you're offering, you can pre-sale and say, I'll give you a big discount on this particular product or service package. It would probably need to be a package. Then people will be able to get a discount for their faith in you paying you up front. You essentially then have negative working capital in your business. You've got that capital up and running to be able to invest into your business, product, service, whatever it is that you're selling. And it's an underutilized way of raising capital. It requires a lot of balls, and you better be able to deliver. So a lot of balls and a lot of creativity. But when it's done well, it really works fantastically well. And that's because of the negative working capital that you will then have in your business. So there you have it, guys. There are ways that I've raised capital. I hope that the creativity sparks some ideas for you. Disclaimer, of course, I'm not a financial advisor. Nothing here is advice. It's just my opinion, what I'm doing, or in this case, what I've done. Just sharing that with the world. Hopefully you got some value out of it, but please don't mistake it for advice. You're responsible for the decisions that you make. And having said that, I hope to catch up with you in another video shortly. Drop me a comment and let me know what you think about the entrepreneurship videos. If there's a topic you want me to cover, leave it in the comments and I'll be sure to get to it. Thank you. Bye.